So the Connells group, that's like Sequence, William H. Brown, Connells itself, Sharman Quinney, they're one of the largest employers of mortgage brokers and one of the largest trainers of mortgage brokers in the UK. They now have bought Countrywide as well. So most chances are a lot of people come into the industry, they're trained and they get their initial kind of steps and their learnings in a Connells group business. And I actually started that myself. And so in this video, I want to actually share my experience of what it was like working at Connells, why I did it, the pros, the cons. There's a lot of pros to it. There's some really good pros that people don't talk about once they leave. And so I'm going to try and be as fair as I can. But there's also a lot of cons, and there's a lot of things, big cons, a lot of things I wish I knew now that I didn't know then. I would have done things very, very differently. So I want to share that with you. Now, again, I will say this video is my experience, not a representation of the entire company. So please understand that your other people's experiences may differ and vary massively depending on branch and whatever they do. But this is my experience and my own journey with it. And I wanted to share it with you because I think you might find it valuable in making that decision of whether or not this is maybe a training route you want to go down. So the first thing to talk about is, why did I join Connells in the first place? Well, for me, I originally started in musical theatre, performing arts. That was where my first career was. I was a professional in that. And quite quickly decided that I wanted to work in property, in mortgages. Ideally was the original thing. I started as an estate agent. I left that career. I started as an estate agent in Connells. My dad was head of training and development for the mortgage side of things in Connells. And so I started there. And then I quite quickly, then within a few years, moved into being a mortgage broker and moved between different branches and sectors within Connells for that. But I joined because I wanted to actually have a career. That was what I wanted. I wanted a career. Previously I'd had the performing arts kind of freelance work, but I wanted something that I could make money from, to be completely honest with you. And I wanted them to pay for the training, and I knew that was possible because that's what my dad did. So that's the reason I joined, is I wanted to be able to build a career long term, and the idea of potentially opening up avenues to going self-employed and stuff like that. That was the goal. But I knew I needed structure, I needed training, and I needed a salary, and that's why I joined. Now, what was my experience, or what did I expect versus what was the reality of it? I'm not going to lie. Like, everyone hears bad stories about Connells and Countrywide and stuff like that. My experience and what I expected was not much different to what I got, to be completely honest with you. It wasn't that bad at all. So like, the things I expected that was going to kind of happen, I think I expected it was going to be hard, and it was hard. I expected it was going to be long hours, and it was long hours. One thing I didn't expect, which is an interesting one, is the bureaucracy and the kind of political stuff that goes on within it. So obviously it's a large corporate company, and so because of that, there's lots of middle management and people who are kind of like mortgage managers, and then managers of the managers, and then managers of the managers of the managers. And again, that was probably what my dad did as well, was training directors and all this stuff. There's a lot of layers of bloat, in my opinion. And it was a little bit like Game of Thrones. That's the way I could describe it. A bit like Game of Thrones. There wasn't a lot of honesty, is what I'd say. And I struggle with that because I'm an honest person. I am an honest person. That's to a fault. It's probably one of my things of having ADHD. I'm very like an oversharer. And so I'm very open and honest about 99% of everything I do. And it always got me in trouble. Always got me in trouble because I wasn't playing the game. And that's what I would say. Be prepared. The reality of that is that. Also, the reality is they really don't care about you. And I think that's something that you hear a lot about, but they don't. You are a tiny, tiny cog in a very large machine, and they don't care about you, and they can replace you tomorrow. And I think that egos don't do well in that space, for sure. That's what I would say. So then what did a typical day look like? Let's break that down. What did a typical day look like? Well, for me, a typical day would look something like this. I would start off normally coming in about 8 a.m. So it'd be an 8 a.m. start, and that would be what I call the morning meetings. So a morning meeting. And these morning meetings, we would sit down with the estate agents, you'd sit down with the team, and you would talk through who'd been viewing that day, or the day before, who had made offers on properties the day before, who was viewing today, and who had been booked in to see us as a mortgage advisor. So you'd unpack these meetings. Now, I'm not going to lie, these meetings were probably the most painful part, because the issue you have with mortgages is that as a mortgage broker in these companies is you might have 5 or 6 estate agents in a branch and 1 mortgage advisor. And if the branch manager has bad culture and they're not interested in mortgages, you'd be like herding cats. It's really like that bad. But the morning meeting would start. The morning meeting would probably last about 30 minutes. And then in an ideal world, your trainer would say you need to do one-to-ones then with your manager would say, your sales manager would say you need to do one-to-ones with all the negotiators. I'm not going to lie. I could not tell you a single person I know who really did that. Looking back at it again, I probably would have done that if it was me. That's what I mean. Like one of the things I definitely look back at it as things I would have done differently is I think I would have spent more time in the development phase of both myself and also the team around me, of getting them to understand it, because they're the people who feed you the leads. But that's what it would look like. Then really from about 9 a.m, I would probably go in. I might see my first appointment. So the first appointment would be at 9 o'clock. So the appointments that were split into what we call is a first and a second. So a first appointment would be when you'd first ever meet them. Second appointment would be when you would sign them up when they'd found a house. When I coach people, I call this a discovery call and a submission call. It's a similar structure to what they do there, but a better structure if I'm completely candid. But they used to call first appointments. But your first appointment, or your first appointment of the day, would normally start at about 9 a.m. And appointments for me would be 2 hours. All right. So this is what I used to find crazy, but they're about 2 hours. Now, everybody you speak to will do different things with this, but when we were trained, it was 2 hours, and you would allow by the way, to me, that is way too long as an appointment. The clients, I have no idea. You would sit with the clients and you would literally go through like a whole sales kind of like presentation, and you'd go through the fact find and you'd fill in. It was horrendous. So there'd be 2 hours long, and you'd go through the sales presentation, the IDDs, which is all your terms of business. You go through a full fact find, you go through sourcing. I mean, it was death by information, and it works. I mean, the system has ran for decades at this point, but my gosh, is it death by information? But that's kind of what it would be. A lot more experienced advisors, and depending on the sales managers and stuff, they would cut those down. But when you first started out, they really were like 2 hours, and you'd need 2 hours because you'd be bumbling through it like crazy. It was really, really real mess. Then what you do, let's say you got 9 to 11, you might then have, you got 11, you'd have your 9 to 11, you'd have 11, you'd have maybe a 1, you'd have a 3, you might have a 5. So that would be your appointment slots, which interestingly is how I run my day now, but I still do it. But that would be like my appointments of the day. That was what my typical day would look like. So that might be a first appointment, there might be a second appointment here, and then it might be another first appointment. And what would happen is you would then, any of these gaps, you would do admin in the gaps. Now you'd finish the day at 6 p.m, but you wouldn't. All right, you wouldn't. So like most of the time you'd run over till about 7 p.m. So you'd be in there from like 8 o'clock in the morning till 7 p.m. You probably noticed there's no time for lunch. That was pretty common as well. You wouldn't really have any time for lunch. And what that would do is I would work all the way through, but you wouldn't always have appointments. So depending on the branch busyness, you wouldn't always have appointments. And so sometimes that day would be not ever dead, but that's where your admin would go. So you might have a first appointment in the morning, then nothing until maybe 3 o'clock. So you're like 9 a.m. where you'd have 9 till 11, and then you're 11 till 3. You could be doing admin and packaging cases. That's normally how it would work. But the diary would be set up like that. So the diary would be set up how we've just seen here. And why that would happen is the negotiators, so the estate agents, EA, would have diary access. We'd call them EA, by the way. The estate agents, the negotiators, they would have access to your diary, and they would book people in, which then brings me on to my next bit I want to talk about, which is where do the leads actually come from? Who books you leads? Well, this is the thing that's interesting about the Connells system, that it's quite odd and quite unique compared to most businesses. Obviously, it's not unique because Connells is huge, but it is quite unique compared to most. Your leads come from a number of places. They're going to normally come from the EA team. These people are going to book you. The EA team are going to book in people for you. So anybody who's out viewing, anybody who's offered on a property, anybody who's just kind of even got a whiff of interest, they're going to try and book them in for mortgages. They're targeted heavily on mortgages, extremely heavily on mortgages. So they are going to push them in very, very, very strong. They're going to constantly do that. They get paid a commission or a small bonus, a small amount of money. I can't remember exactly the amount. I think it was like 50 quid an appointment or a sign up. It might be 50 quid a sign up. It was each thing is a bit different. Some of them were like £5 an appointment. Some people were like £50 a sign up. So it really depended on the structure that each branch had and each kind of area had. But the estate agency team are paid for booking people in. Now, this is where you will see more about their bad practices, and we'll pin that for a second, but this is where a lot of the bad practices would happen, and we'll pin that and we'll come back to that later on. But the leads would come from the estate agency team, would be the main one, and then they would also have head office, so HQ, head office, would send you remos. And so the way that it worked was you had a lifetime fee, and so if you inherited a branch, you became the advisor in that branch, you would get this branch and you would get all of the back book of the advisor who'd worked there before you, which is why you wanted a branch, by the way, that had been established for a while. If you had a new branch, you had no back book, so you'd have a hard thing. So what would happen is these brokers, they do like what they call lifetime fees, which is very strange. And so it's not a good thing to do. So if you go on, but they do that, which is effectively you pay one off and then you never pay again. You still pay admin fees. It's all a bit strange with how they do it and a bit, in my opinion, black hat. But again, my opinion. But once they're a lifetime broker, like fee, once they're a lifetime client, the HQ, the head office, and I think that's in Colchester, from what my memory serves me, would go and they would book in constantly new people into your diary or existing clients into your diary. So your diary would just consist of leads coming from the EA team and the Remo team, and you'd probably end up with about 10 to 15 leads per week, which is a lot, by the way, like a lot. And your conversion on these is normally going to be, if you're good, it's going to be in around 1 in 4 to kind of 1 in 3 is what the kind of conversion would be. Now, that's where your leads come from. The issue, though, with the leads, if you really wanted to be the best, you should self-gen. In other words, you should start to learn how to generate your own leads. I'm going to be fully transparent with you. I did not do that, and most people don't. And it is one of the biggest mistakes. Not learning how to self-gen. Because when you go off on your own, the number one skill you need is to be able to self-gen. And if you don't learn it in an environment where you can fail, which you can in there, struggle. But that's where the leads come from when it comes to Connells. So you end up with a constant kind of flurry and barrage of leads, and that's great. It's not a problem at all. You end up with, it's a really good spot to be in. And I think it means you never really worry about leads. Now, obviously, if you inherit a new branch, you would. And I worked in a new branch, and I worked in an established branch. I worked in 2 very established branches who were like top writers, and then one new one. And the new one is brutal. So yeah, you always want to be in an established branch wherever possible. Which brings us on to the next bit I want to talk about, which is targets and pressure. So, targets and pressure. If I'm completely honest with you, when it comes to targets and pressure in Connells, I think that they probably wrote the book on this. Like, it's the most targeted, pressured, like, it's insane. Like, they are so pressured and so target driven, even though they're not technically supposed to be, and there's loads of caveats on that. They are so intense. The pressure of that kind of work-life balance and what your sales manager will do is insane. And what you find is it's like this with Connells, is you've got this. So you're at the bottom here, and that's the broker. But then the guy above you is your manager. They're known as an MSSM, which is a mortgage services sales manager. I can't remember the one above that. But then he's got a guy above him, and he's got a guy above him, and so on and so forth. And it just rolls downhill constantly. And it is a pyramid, because if you think this person's dealing with, there's like loads of advisors under the MSSM, but this guy's got loads of MSSMs under him. That's a regional manager. So there's like a huge pyramid scheme of, that's why I say about it being political, of if you've got, it's very hard for is it carrot and stick mentality. It's very hard in many industries, like large industries, to try and coax people in with good culture when it's large, but it's much easier just to govern them and operate them with fear. And so they absolutely would just, yeah, it was brutal. They would target you. They would call you out. Now, for myself, I never really struggled with that personally. I mean, I don't like it, but I was always relatively good writer, so that was never a problem. I was lucky to be in a good branch, and I also knew what I was doing, and I was also lucky to have my dad do what he did, so I was getting trained by him separately as well. But the pressure of that kind of thing, there's a lot of people, good friends of mine, who were churned up in that and destroyed. Really, they really struggled with it. And there are a lot of people of you who message me who've got jobs, and you're 3-4 months in, and you're like, this is really hard, and it is hard. The pressure and the targets are very high. Very high indeed. So be aware of that. It's pretty tough, and you do oftentimes get these MSSMs, these kind of sales manager people here. Oh, yeah, these MSSMs. If I'm going to be honest with you, and I'm not a type of person, most of the time these people here, not always, but most of the time, they're just a nightmare, and they think very highly of themselves because all of a sudden now they're in charge, and you get that a lot. It's tough. It's a tough place to be in. My personal opinion with this is, once you're a good broker, you go off on your own and you just go self-employed on your own. That's my personal take, which we'll talk about more at the end. But that's my because this career path is it's fine, I guess. Some of you will watch this, and you might be watching this, and you're that person. Cool, you do you. You'll make a hell of a lot more money being self-employed as a mortgage advisor and have a much happier life. That's just my opinion on it. That's kind of the targets and the pressure. So the targets themselves, though, they're all like with us. We were expected to write 100 grand a year. I did that pretty much every time, so that was never a problem. But most of the time, I that was fine to do. But for some advisors, it just wasn't. And the pressure there, I can imagine it's much higher now. It was a long time ago that I was in there, because I think 100 grand would be pretty easy to do in most branches nowadays. But I can imagine it's probably more like 150, maybe even 2. Probably not 2, but probably more like 150. But yeah, pretty crazy. So let's talk about the next bit, which is the training and support. Now, this is where I'm actually quite informed, probably most informed than most people, is this is what my dad did. So this is my dad's job. So when it came to training and support, the training and support at Connells was phenomenal. Now, I am biased with that, but it was. Now, what they would do with the training is, when you first came on, this is kind of how the training would go. So you would come in, if you're completely unqualified, you would come in and put you through your CF1 and CF6, which, by the way, is the equivalent of CMAP. It's effectively a different version of CMAP. So they would put you through that, the full training, the lot. That's how they would put you through it. And you would go on like a 1 week intensive study course, then you would do the exam, then you do another week intensive study course for the other one, and you do the exam. And they would do that. We also did a thing which is called a NELP. And that was a new entrant learning program, which is what my dad wrote. Now, that was all based around learning about the estate agency side of it. So what did the estate agents do? So effectively, not learning the job. Have you shadowed some advisors? Have you learned about what insurances are? Have you seen what like a negotiator does? Have you seen what a lister does? Have you sat with a branch manager and looked at the profit and loss? Like a new entrant learning program. The idea was to train you. And to be honest with you, this kind of thing here, this NELP and these two, could be anywhere from 3 to 6 months, depending on how long it takes you and stuff. So that would be where they'd put you through the training. And then once they'd done that, they would then actually do like your sign off for giving advice. And this would be 3 weeks of role play. I don't know how they do now, but with us, we would all went to, I think it was, where was it? Like Leicester? We all went up to Leicester for 3 weeks in an intensive kind of like a training suite. This is what my dad's job was to do, and not to run it, but to kind of design it and orchestrate it. And his team would then take out the training. And you would go in and you would learn how to use the systems, how to talk, how to sell, how to like everything. You'd role play the lot. This was brilliant. This was absolutely brilliant. A lot of the stuff I teach now as a coach, the initial seeds of it were started in those 3 weeks, funnily enough. And I was like, oh, I got really into the whole training side of it in those 3 weeks, the kind of understanding of it. Now, don't get me wrong, most people hate it, think they're better than it and know the job. And those are the people who now still come to me and go, can you help me? Because they're not really learning. This is really good, that kind of that 3 weeks. From there, you then go into the branches. So you then go into the branch, and now you're actually part of your MSSM. They are now the trainer. I'm not going to lie, this is where it can kind of go to pot. So the training and support at the beginning is brilliant. I would say, though, that the training and support after that really comes down to the skill and level of the sales manager, to which many of them are just mortgage brokers who have performed very well and wrote a lot of business, and so they've given them a promotion, and they don't really know that they're not good managers, and they don't really know how to develop them. I had with myself a lot of time. I liked my MSSM. I had a couple of MSSMs. My first one I had was a really, really good advisor, not a great manager. She was massively thrown in the deep end, bless her. She was a brilliant advisor though. And she had the problem of trying to go from being one of the top advisors in our brand, in our kind of team, to now being a manager, and nobody really respecting her. So I really felt for her on that. She was never really given the opportunity to then become the manager I think she probably could have been, but she was sidestepped, and again, politics and Game of Thrones, and sidestepped because the team didn't really respect her the way that they probably should have. And that was an interesting one. Then what you have is we then had an MSSM who came along who had come from a bank and hadn't even worked really in mortgages. And he was an interesting character because I really liked him as a person. We had a bit of a kind of fiery relationship. But again, in the end, I don't think the teams fully respected him again. Why I'm just bringing that up is that it really comes down to how good your MSSM is as to how good your ongoing training and support is. And that's where that stress and that pressure and that targets can come in. The skills when you have this is your people you have who manage you, their training and support isn't always great. But the training and development at the beginning, the actual education of getting the role, brilliant. Okay. And that's one of the things I think. And you also learn by that kind of baptism of fire, which I think is quite important. So then what are the pros of working at Connells? Because there are pros. There's a lot of pros to working at Connells. Well, the pros to working at Connells, in my opinion, are as follows. You get great training. You do get great training. So the training is really, really good. You also get leads. So you get a lot of leads and the ability to fail at those leads. So like it's okay if it goes wrong because there's always going to be a constant stream of people coming through the kind of churning factory. Always. Because of that, it's massive benefit there. You are also going to get exposure to the EA side, the estate agency side, which I think is actually important to do because it's a huge part of our job. So you'll get exposed to the whole kind of how the sausage machine works, not just like mortgages and then we don't really understand the estate agency bit and they can't do this. And we have this demonization of them. Estate agents are a huge part of what we do. They're like someone we have to deal with on a regular basis. And it blows my mind the amount of mortgage brokers who don't understand this side of it. And so because of that, they then demonize it and talk bad about it, which by the way, there's some merit in what they say sometimes. And there's also not in a lot of it because most of the time they don't really understand it. And so exposed to that estate agency, how it's made, it makes you so much better later on in understanding what's happening and what goes on. So I think it's really, really good for that. The other thing as well is you get income. So you're going to have an income while you're learning the job. So you're going to get a salary, you're going to get some commission, and it can be paid pretty well. I think with me, I think my basic salary when I first started was about 18,000 when I first started, plus I think it was maybe 12% commission. And then I think it was a 3% bonus. And I think that was it. I think that was it. And then I think there was a car allowance of 150 car. So it was 150 car allowance. That's, I think, roughly what it was when I first started. It went up. And obviously, as I like progressed and moved into different kind of categories, it did go up and I got into different blocks. But that, I think, was my trainee one. So those are the kind of pros to it. The cons to it, though, are pretty steep, which is there's no work-life balance. So no life balance at all, like at all. I think it's brutal. It is brutally brutal. The work-life balance is horrendous. You know, you can have awful managers. So you can have an awful manager, and you can also have an awful team. The other thing I think of the cons of it is bad practices. Some of the stuff in the branches are borderline unethical. I wouldn't say they're illegal, but they're unethical. And so there were times where you would have certain discussions where they would want you, the estate agency side of things, not the mortgage team, but like there would be a lot of pressure to try and talk about the applicants and their financial situations, obviously, so they could sell them the house. And that to me was always a negative. I didn't like that at all. I thought that was bad. You hear a lot about this thing called conditional selling as well, which is this idea that you only sell the house to the person who does the mortgage with you. That's not as common as you think in regards to as black and white as that. But some branch has some level of that, meaning that there's some sort of prioritization baked into it. They don't say that, but there definitely is. But when it's used here in the industry, it's talked about like they just refuse to sell a house to someone who didn't do the mortgage with them. That I've never worked in a branch where that ever happened, but I have worked in a branch where like that in a very watered down version has existed. So it does exist, but not in the same extent that you'd hear people talk about. So that's one of those things as well. The con is you're not, it's not yours. You're not building anything that your own. You literally are. If you leave tomorrow, they will replace you tomorrow. Like it doesn't matter. And so you're not ever building a brand. You're not building anything. You're learning the job. So it's like an apprenticeship. That's the way I saw it. But you're not building anything of your own. I think that's a massive con. So let's go for a bit of a rapid round on this, which is answering a few of the kind of tie-ups of how this works. So what was the biggest lesson I learned at Connells? The biggest lesson I learned at Connells was quite straightforward, which was that if you get a really solid process and you follow a process and you stick to it, you will get a systemized result. In other words, you get a predictable result. That was my biggest thing I learned, is that their job was to bring people in who didn't know the job and within 2 years make them mortgage advisors. And they did that by following a process. That 100% is the biggest thing I learned by far, which leads me to the next bit, which is what is the skills that I developed? The skills I developed was discipline. And also one of the skills I massively developed was realizing that I had to win people over with my personality and my sales skills. I mean, the ability to use sales skills to be able to win people over, which then formed later into personal branding and how I ended up going down the route I was in, which was process paired with personality is always going to win. Because if you've got something that's consistent and then they pick you over everybody else, that was a really big one. And I learned that because Connells has multiple branches in one town, and where I worked, the only competitor I had was other Connells people. So if they paid a lifetime fee, the decision was not which broker should. It wasn't like who's got the better deal. We all had access to the same stuff. So it was literally who do I like more? And for me, that's where I learned that skill. So I was very, very, feel very blessed to being around that. And I was also around, I was lucky enough and blessed enough to be in a team for the first year and a half of being a broker, which was one of the top performing teams in Connells at the time. And so very much iron sharpens iron. I was doing very, very well. I was one of the top performers as a new person, and I was insignificant compared to the people who were around me. So I was definitely lucky enough that I was kind of what I'd say surrounded by giants. And every one of those people has left and gone and built very successful businesses, including the MSSM that I spoke about before that was absolutely shafted. And she has gone off and built a brilliant mortgage business locally to me. And all of these things, I was very lucky to be around that and see that. And I think it's hugely reflected in what I ended up doing today. The next bit is who is Connells good for? I think Connells is really good for people who are wanting training, people like myself when I started, I wanted a career, I wanted some income, I wanted to build something and learn something. It's like an apprenticeship. That's what I think Connells is good for. I think it's brilliant for those. But who is Connells not good for? It's not good for people who want to build a business. If you're somebody who's really entrepreneurial already and you want to dive in and you want to build your own thing, you want to be on social media, you want to grow a brand, Connells will not allow you to do that. You are growing under their brand and you're going to have to start again later. I would never change it. I always would have gone to Connells because it changed. It was absolutely what I needed at the time as I was studying other stuff, behavioral psychology, kind of, sales psychology, marketing, things like that on the side. And that allowed me to then leave as a broker and then excel. But it's not good for you if you are entrepreneurial, don't like being told what to do, not good for work-life balance, for example. You've got a lot of commitments. It's not a part-time job. It's over full-time. So it's not good for that. So then why did I leave? That's the next question. The biggest reason, honestly, was two things. I didn't like the direction of where the team was going, and that I found that sad. I probably would have stayed if the kind of mass migration of all of the good performers hadn't happened. I probably would have stayed, because I'm more about being around great people, and the great people were leaving in droves, and that concerned me a lot. And I also then, once that started happening, I started feeling like it was time to leave and go and work for an independent financial planning firm as a broker, mortgage broker in that, and try my hand at having access to whole of market, because Connells doesn't. And that was like, I wanted to kind of really be the next stage of my career. I didn't like where it was going in Connells, and I wanted to move on and have a bit more autonomy and have a bit more freedom. And so what I did next, like I said, is I went into a financial planning firm. And from there, that's when I learned the biggest lesson I think that you should all take away was, I learned in that financial planning firm that I did not know how to generate leads. So I was a really good writer at Connells. I'd done well. I'd made them a lot of money. Not so much me. When I went to work in this independent financial planning firm where there was no leads and I was on my own, I realized very quickly I didn't have a clue what I was doing. And I didn't know how to generate leads, didn't know how to do anything. And what happened next was I became obsessed with maximizing every client I could get, and also trying to get leads. So using all alternative avenues, social media, everything. And that, if I'm not gonna lie, like that was the birth. Leaving Connells was the birth of what I do now, because I got obsessed with, how do I make the most out of every client? So I make the most money. So they take the most insurance and they take everything, because I'm not seeing 10 to 15 appointments a week now. I'm maybe seeing one, maybe seeing 3, 4 a month at the beginning, maybe even 2 a month. So I was like, I need these to pay my bills. I need to pay my mortgage through these people. And so I started getting obsessed with maximizing the income and obsessed with generating leads. And it was a brutal kind of 18 months doing that. And then eventually left that firm and went on my own, self-employed, and built and did my own business on that. And the rest is history. Did well, became a mortgage coach, taught that. But that was the biggest thing I think was my final advice. My biggest takeaway for this is, whatever you do when you're in Connells, start learning how to self-gen and building a brand. Because if you don't, you will struggle by far. You just will. And if that's you, what I'd recommend you do is check out my main channel, actually my Ashbourne business coaching channel. And that talks about that stuff. That stuff is for brokers who are established, who want to learn how to build their brands, increase their income, do that type of stuff. And it's all in there. So I highly recommend you check out that channel, and I'll put one of the videos up on screen here so you can see what it is. And that, if you're starting your career, but you're consuming this content too, you'll have a much bigger head start than I ever had.